Guys, good evening. Welcome to my YouTube channel. This is my very first video on this channel, and I promise to give you guys high quality videos, where you'll be able to learn something out of it. So today we're going to talk about candle range theory, popularly known as CRT. I'm going to teach us the proper way to trade it, right? Enough of the losses, enough of blowing accounts. Let's get straight to it. So CRT is basically the formation of evening star or morning star candle in higher time frame. We can actually use this to get our bias for the day when spotted from 4 hours time frame and above. Now, looking at what I've drawn here, you can see that this is a textbook illustration of what CRT is all about, right? Where we have an impulsive candle as our first candle, then the second candle happens to be a small candle, smaller than the entire candle of the first one. Then the third one is the mitigation candle, where price comes to mitigate our key level or our POI and then distribute to the downside. This is a bearish scenario. We have the one for a bullish scenario too. So let's just get straight to what we have for the day. So now the proper way to trade CRT, I've actually summarized everything into these three important steps that we need to take note of, right? Once these three things are in place, then our CRT has a high probability of playing out. Of course, nothing is 100%, almost is 100% sure, but our win rate should increase. So our very first thing to note here is key level, right? So it is important that our CRT should be mitigating a significant key level on the higher time frame, right? This is one of the most important thing to consider when trading CRT. You do not trade CRT blindly. We trade CRT when it is mitigating a higher time frame key level. Now I know that I've not explained what key level is all about. This is my very first video. I'm starting with candle range theory because I've gotten a lot of questions concerning it and I want to throw more light to it. So in my subsequent videos, I would explain how to properly trade key levels. But for now, let's stick to candle range theory. So we actually want our CRT to be mitigating a key level. A key level is more like a significant point in price that could push price. Now, the second thing in our consideration is the position, right? Is this CRT found in premium or is this CRT found in discount? You cannot trade a bearish CRT in a discounted level. What do we do in discounts? We buy in discounts, we sell at premium. So the position of the formation of this CRT is key. It's very important. We do not trade CRT blindly. We trade it at a significant point in price. So the third thing in our list is what a lower time frame shift. By lower time frame shifts, I mean the formation of a range. As you can see, this is the exact or this is the exact textbook illustration we want to see price do in a lower time frame, right? If this is formed on the daily, we'd want to look for our lower time frame shift on the 15 minutes. If it is formed on the 4 hours, we want to look for our lower time frame shift on the 5 minutes time frame. If this is formed on the weekly, we want to look for our lower time frame shift on the 30 minutes time frame, and the list goes on depending on how we trade. So let's look at an example. If you have questions, please feel free to post it in the comment section and I'll be there to attend to each and every one of you. So using USD JPY as an illustration, now using it as an illustration, we can obviously see the formation of what of a morning star candle or a CRT candle. And what else can we see? We can see that this CRT is coming from what? A significant key level. This key level is actually very, very significant. In our subsequent videos, I'm going to teach us how to spot significant key levels, okay? So this key level is significant. And now, that's the first in our criteria, right? Number one, it should come from what, a key level. But to the position, where exactly is this CRT found? Is it found in premium or is it found in discount? This is a range. We have a range from this high to this low. So now, so looking at that, what's the position of this CRT? We can see that this CRT is found in what? In a discounted level, and this is a buy scenario for a CRT, right? The one I do here is for a sell scenario. This is for a buy scenario, and this can be found in what? In a discounted level. Then the next thing we need to look for what? Looking at the third criteria, a lower time frame shift. Now, this is found on the daily time frame, and like I said, the lower time frame we should be looking at is what? The 15 minutes time frame. Now, looking at this 15 minutes time frame now, what can we see? What can we see? We can see what? A sweep of liquidity and a break of structure. Sweep of liquidity, a break of structure, as I've illustrated already. So price has been mitigating, these levels, leaving us with this. In our subsequent videos, I'm going to explain entries, but for now, so this is the buy that happened on USDJPY on Thursday last week. So that's basically what I mean. Now, another example now I would like to share. This is another example I would like to share. Okay, now that's the first example. Now looking at the second example, the one that happened today, I was talking to someone about it. Now looking at this, we have a range. You can probably see that we have a range from where? From this high to this low. From this high to this low. Okay, I've already illustrated that here now. So we can see that price is currently in the premium level. And what else can we see? We can see that price is reacting to what? This open close significant key level. And we can already spot our CRT, right? Where we have what? An impulsive candle, a formation of what? Where price is trying to form, you know, an evening star. So what else can we see? We can see that price has actually ticked our boxes for the first criteria, which is price should be reacting off a key level. Second criteria, which is price should be in what? In a premium level for a sale. But then the third one, which is a lower time frame shift, right? And this is the exact lower time frame shift we should see. Something like this. We should see this on our lower time frame. Now going to the 15 minutes, what can now looking at this, in as much as this the CRT that we found, ticked our boxes. Now look at this. Does this make any sense to us? Like, can we spot any lower time frame shift here? The answer is no. There is no lower time frame shift here. So I was already expecting some buys on USDJPY today. So I believe with these three important steps, we should be able to trade CRT effectively, right? Because there is no lower time frame shift here. Like, everything is more like in a range. So we should expect what? To expect the entire CRT range to be broken. That's my expectation from USDJPY. So please, if you found this video very, 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 very helpful to you, please do well to like, share, and subscribe to my YouTube channel. And of course, I'm going to be dropping more important tips or more important keynotes that would help us in our trading. Good luck and good luck. See you guys at the top. Bye.